Okay, guys, super excited to be on the call. I'm excited because it's another weekend. Happy weekend. How are you doing? Talk to me, guys. How's your day going? I'm excited about this. And as usual, I just have this for you. We have an update on the crypto market, the last trade I posted for you guys on Cardano. And I just want to give you an update on that trade. It has gone ahead and do what we said it was going to do. However, I tell people whenever you're trading, especially to the people in our community, that whenever you're trading, you need to always look left. Always look left. So we had a rejection with a first level here. And I told us to buy at 90 cents here. And the market went up to get to this, which is over 200 pips. Now, but on his way up, he faced a challenge, a hiccup here. And when he faced a challenge, which is a MOPO check, this is a MOPO check. So this is a police check. And at the checking point, he did not meet their criteria. So what happened? They sent him back home. He forgot his driver's license or something. I don't know what he forgot, you know. I don't know what he forgot, but what I'm here to let you know, is that he actually forgot, something at home. So right now, Cardano faced down. So we are still on a downtrend, okay? We're still on a downtrend. When you follow the trend, okay? You're still on the downtrend. And when it got here, you know, a lot of people would have sold. But, you know, this is a counter trend because it's against the trend. So we're actually going to be waiting for a reaction around this place. Two things will happen, okay? Is either it comes down and break this place on the continuation of the downward trend, or it goes up here and break it. So when it breaks above this zone, then we'll look for a buy at this level, which is about on 11 cent, 11 cent, okay? So I feel everyone should be able to partake in this after the breakout happened, but that's my own information for Cardano. But on the bigger picture, if you check the higher time frame, it has been on a higher move for a very long time. And if you draw your Fibonacci, if you're a Fibonacci trader, if you draw your Fib from this place, you see one of the most powerful zones is between the 61.8 and 79. So within that, that's a killer zone. So we have a rejection at the killer zone, which is one of the reasons I call the buy at the other time. So if it breaks up here, we're going to be good. That means that it's going to be going for an extension. It's going to be going for an extension that will be higher, okay, to this place, okay? This will be the extension, okay? So basically, so this is the 4 hours analysis. Like I told you earlier, you have to always obey the required level. So this is the required level that the market got rejected from, which is also a major place for weekly. So a major place for weekly. So we're good for the buy. However, always look left, which is the neckline. And if you watch the previous video, the take profit was around this zone or this. I think it was the first level TP, second level TP. So that's Cardano for us. I also reached out to you guys on US30, and I told you guys that US30 was going to buy, and it has done what it's meant to do. So let's see another next move that I'm looking at. Okay, this was the entry. This was the entry last week. If you watch the previous video, this was the entry for a buy. You know, the buy went up and came down back into this buy zone. Okay, so as it is now, it has come back for a head and shoulder for its demand at the demand level, and it has also formed a swing reversal, okay, which is bearish Arame, what's this other kind of rejection candle? So this is its confirmation. Another thing you can see here is what is called inside bar, okay? Another thing you can see here when the market close is inside bar. And a lot of time, inside bar is a reversal pattern. So if you look closely, you will see that, oh, it's not inside bar, okay? This week is lower than this, so we can't talk about that as inside bar. But inside bar is a major reversal pattern that needs to be, is an inside bar. So when you see inside bar at a level, 80 to 90% of the time, the market need to break outside that bar. Okay, so this is an inside bar zone, for example. How do I know? You can see this big candle. You can see this big candle, you can see this small candle. So the market needs to take a decision either to break out or to keep going down. So, but for now, we are in this inside bar, okay? Okay, which is a what? Which is a rejection, a ranging market. And if you've been following me for a while, I've told you over and over again, you don't trade in the ranging market. So what will you do? If you are still in the buy, good, I'm sure you should have broken even. So if it has not hit you out, you can patiently wait for it to go up, because if that happens, we should expect a move to this neckline. So this neckline, we should expect a move at this neckline, but this neckline is a bit might not be powerful compared to this level. So, but you cannot just, all the necklines are not tradable necklines, okay? Except you know how to use the neck pattern, okay? But this is good. So let's wait for the market to break out of this box, okay? So what I see happening, because we are on an uptrend, okay? So what I see happening is that it's going to do what? It's going to break out of this. What I see happening is that it's going to break outside of this, do a retest, and go up. And if it breaks down, I'm going to be conscious, because this zone is a weekly level zone, which is a very powerful one. And we are on a 4 hours. So I'm not going to be doing anything. I want it to break out. That is when the sell, the buy can be important. Okay. So let me bring out a good example again of what has happened. Something like this again occur. This is it. Okay. You can see the neckline. You can see the box rather. Okay, you can see the box. So what did I say? You don't trade it because it's closer to the weekly level. So because it's closer to a weekly major level, at the breakout, you ignore it. So the same way, you don't sell here. You want to look for a buy when it breaks out. And that's what eventually happened. But a lot of traders that trades breakout, range breakouts, they would have hit the rock here. But no, you want to always trade with the trend. The trend is your friend. Look at it here, the same scenario. Look at the box here. Look at the box here. Okay, the market broke it. Okay, you buy at the retest of it. If it does retest, you buy. Look at it. You don't buy at the breakout because it could be a fake out. So it could fake out. So you don't want to buy at fake out. So especially when it is on an uptrend, you want to make sure you trade with the trend and not against the trend. Okay, very, very important. I think you guys gain some value there. So let me see if I can go through just one currency. Just one currency. And if you want me to go through any charts, any analysis, drop a comment, drop on the comment box. I could take time to analyze that for you. Okay, my favorite is gold. I like gold a lot, but you have to be careful. I got a testimonial from someone when I called the gold buy at 1800, and he said he made a lot of money. And when the retracement started happening, he did not cash out. He said he grew close about, he made over 6,000 US dollars from it. But whenever you're in good profit, you clear your profit, bro. Don't leave money, you don't leave. Yes, You can be right with your analysis, but you have to protect your capital. You can be nice with your analysis, but you have to protect your capital. You now said that you eventually blew the account. Oh, that one is not deliverance smarter, guys. That is indiscipline. You just have to be disciplined. That's total indiscipline. How will you make $7,000 from less than 1,000 from the gold? And you didn't bank profits. Guys, he did not bank profits. That's painful, very painful. Just sent to me on WhatsApp about a week or 2 weeks ago now. That one does not, you don't need it. What you need is discipline. Just be disciplined. But why will you grow money over 1,000% and you did not cash out, you didn't do anything, you didn't move, and you didn't even close the trade? So although according to him, which I like the fact that he confessed, he was adding more positions to it at reversal. So each time the trade reverses, he will add, and that's one of the things I also need to help YouTubers, the YouTube audience. They need to know that there is only one place in the market to sell. There is only one place in the market to sell. There is only one place in the market to buy. So let me give you that analysis right now. If you are to going into trade for sell here, when you come back and see the market here, you should not enter the trade. When you come back and you are seeing, let me go to lower time frame. Let me go to lower time frame. Okay, you sold at this spot. I'm sure this is what happened to him. He sold here. He was in profit. This is not the particular trade, but I'm just giving you as an example. He sold there, is in profit. Watch. When he saw the candle kept dropping and he retraced, he sold again. Watch. The market went up, came down, he sold again. He came down, he went up. When he went up, he sold again. When the trade went again, obviously it's in negative at this point. He saw it coming down again. He said it's going down. He sold again. When the market retraced back up, is in negative. He's shouting, why did I enter? Now, when it started coming down again, he sold again. Watch. When it came down, guys. He came down, came back, went back up. Okay, he sold again. Now, when he came down back, he's in profit. All the trades is in profit now. He did not come out because he felt because the trade will still go down back. He did not move stop loss. He did not do anything, but he kept up adding position. Now, watch what happened. The market went back up. Watch. At this point, a lot of the trades he entered is in negative. Then he said, wow, what kind of trade is this? Then he sees another what? Another engulfing. Then he enters again. And guys, the market started coming down. And at this point, the market did a very major retracement. And everything he has worked for, the market collected it. Your entry price in the market is the only place you can go in. That is the way you should always see the market. At this entry price, you must have a lot of conditions to enter. So don't enter a trade because of candle. One of my close students, that's how he was trading, NZD, JPY. The candles were dropping, engulfing candles. He was just adding more position. At the end, he was not able to maximize the trade. But when you enter a trade here, and you want to add, you only need to add at a fib retracement if you identify one. If you don't, no need to add. Wait for this one to get to his promised land. Then adding up, and the challenge that a lot of time what leads people to that is because they want to always put in a trade. You don't need to trade every day. They just want to enter a trade by all means. Okay? So guys, I really want you guys to know that your entry price must be because of certain conditions. So you don't trade because candles are falling. You don't trade because candles are rising. You trade because you have several conditions. It could be your trend line. It could be your Fibonacci. It could be your price action, price reactions. It could be anything. But you must make sure there are conditions that making you to pull the what? Pull the trigger. I'm sure this will add up to a lot of people, and we are good to go. So what do I have on the what? What do I have on gold? What I can see on gold right now is that gold is trying to play out on a sell move, okay? Whenever there is a drop, what? A drop like this, okay? This is a drop. And this drop, there must be a retracement, okay? Now, the drop came down completely and went back up, and I knew that I was going to fall back. Now, why do I know it's going to fall back? Because you cannot have this kind of drop and not do a retracement for continuation. So that means that if he's doing a retracement for continuation, that means that gold needs to find his way back to this place. Now, if you see this, if you copy this and paste here, you can see that it will give us AB equals CD pattern. If you look at your fib, where's range? If you look at the fib, you will see that we have this AB equals CD zone is at where? 21, 2.7. So if there's anywhere I will want to run out of the market, I'll run up here. But there is a level which is major here from weekly, which is the place I will be looking for buy. So naturally, I would not buy any gold now until it closes above 1980 or above until it closes above 1980. That is the place I'm going to be buying, or it comes down to 1700. Any other thing around this place is a good sell because it's under the rooftop. Okay, it's under the rooftop. So like I said, this is just for educational purposes. You must know that I'm not licensed to give trade alerts or trade signals. This is just my own view of the market, okay? And this is not a promissory trade. You just need to understand how I see the market and what could potentially be happening at the long run. But as usual, I told you, you always want to stay away in the what? In the ranging market. You can see that the market here has started ranging. It went up, it came down, it's been in this box. So you could patiently wait for the market to break out before you sell, or if you know how to go in on a lower time frame, you could find a trade somewhere here. Okay, somewhere here. Okay, so you can go in at somewhere here if you know how to identify your trade pattern. Okay, and you can enjoy your ride from there. You can enjoy your ride. Don't risk more than 1 to 2%. Importantly, because if you don't even know how to calculate it, don't trade such. Okay, because I've seen people want to make money and they don't even know how much they want to lose. You don't trade Forex when you don't know what you want to lose. You must know what you want to lose before you put in your money. You want to know what you want to lose first. You want to know what you want to lose before you put in money. Don't trade Forex because somebody is making money. Trade Forex because you know what you want to lose. It's a give and take. So if I want to pick this trade on Monday when the market opened, I'll pick this trade here. I'll be risking 116 pips. Now 116 pips, 166 pips. Now what am I using it to make? I want to use it to make 1,000 pips, okay? So which is a very good transaction. That's about 1 to 9. Sorry, 1 to 8. So if I lose 1% of my account, if I risk 1% of my account, if this trade goes against me, I will only lose 1%. So if you have $1,000, if this trade goes against you, you will only lose 1% of $1,000, which is $10. $10. And if this trade comes in your favor, guys, if it comes in your favor, that means you will make eight times what you have risked. So let's do some maths together so I can round up. I have another mentorship session today. Okay, so if I have $2,000 and I'm risking 1%, okay, 1%, sorry, 1%. Okay, my 1% of my $2,000 is $20. So I will go to my calculator, position size calculator, and I will calculate that 2% risk here. So I'm not afraid, I'm not ashamed of the trade. Now, when the trade goes in that favor and it ends up in this position, that is, it gets here, that is 8 times my profit. So that is, if the trade ends up coming in my favor and it gets to the promised land, that will be times 80, 20, that's 20 times 8, guys. So that's 160. This is what I have done. I have put in $20 to make $160. This is why a lot of time when it gets to this level now, some people will run out. When it gets to this level, they will run out. They say it's retracing. Not knowing that the market will never go down straight. The market will never go, it will go like this, go up, hit here, go up, make you run out, come down, break the low, hit the low. Some people will rush in and say they want to sell. Come down again, goes up, come down. The market continue, hey, I should have come out. I should have come out. Then it comes down again. Thank God I didn't come out. Thank God I didn't. Then it keeps going down till it gets to the what? To the promised land. But you must know that this is the movement. So you expect it. So now that you're now being negative, oh, I should have closed this trade. Why did I enter? But you already concluded that in your $2,000, you are only going to lose $20, which is 1%. So if it is 2%, that means it's $40 you are risking. So the question is, can you lose $20? Can you lose $40? Are you convenient losing $40? If you are not convenient losing $40, then don't enter the trade at 2%. But if you are convenient risking $20, then go in on 1%. If you are convenient, know what you want to risk before you put in your money. That is the secret of, or one of the secrets of becoming successful in the trading in the financial market. Okay, guys, don't forget to diversify your portfolio to either binary option, either crypto market, either commodity trading or indices. Diversify your portfolio as you master one. As you master one, diversify your portfolio. My name remains Mayowa Owolabi. Okay, super excited on this, and I can tell you, feel free, put a chat comment, put your comment, put your feedback, type in what you learned. Okay, type in what you learned and type in your challenge. I will do another video to answer that your challenge. Thank you so much. I'm here to let you know that the financial market can make you a millionaire. Good to see you on the call. Cheers. Peace out.